Welcome to the deep dive. Today we're getting into a piece called Episode 123, How to Monetize Your Middle Manager as a Passive Income Asset, the Corporate Side Hustle.
Mm,
Yeah, the title alone, it sort of suggests we're looking at some, well, let's just say unconventional workplace strategies.
that's putting it mildly. Yeah, the source material definitely seems to be exploring things, maybe satirically, maybe provocatively,
Yeah.
that are, well, they're pretty far outside the standard employee handbook.
Definitely not best practices.
No, it's more about understanding the thinking behind these potential maneuvers, however unlikely or frankly ill-advised they might be in a real corporate setting.
Exactly. And just to be clear, our goal here isn't to endorse any of this stuff. Not at all.
No, absolutely not.
We're really just here to, pull apart the mechanisms, the approaches being presented purely for like informational and analytical purposes. We want to understand how they supposedly work.
Right, the how.
Okay, so let's dig into the first big section they outline. It's called the budget reallocation hustle.
Okay. And what's interesting right off the bat is that it's not just one thing. It's a multi-step kind of strategy.
Yeah.
So step one, they call it the ghost vendor setup. The
Mhm.
basic idea is creating a fake vendor so the company pays it.
A fake vendor. How?
Well, the mechanism described is setting up an LLC, limited liability company. It could even be a personal one. And you give it a really generic, boring business name. Something like uh, Synergistic Workforce Solutions.
Oh, right. Something that sounds plausible, maybe flies under the radar.
Exactly. It highlights a potential weak spot, right? Vendor onboarding, payment verification. Maybe those processes aren't always super tight, especially for what look like small or routine costs.
Makes sense. Blend in. And the source actually mentions a 50-50 revenue split example for this.
Yeah, build a company through this ghost vendor, then split the cash. That seems to be the idea presented.
Okay, then step two is the training spend laundry. This one feels creative.
It does. It's another angle looking at how existing budget lines could be, well, misused,
Yeah.
specifically training funds. The example they give is like expensing LinkedIn learning licenses. But then instead of using them for training, reselling the logins on dark web forums.
Wow. Okay. They even mention a price.
Yeah, something like selling Coursera courses for like $5 via private message. It just shows how even beneficial budgets, like for training, could theoretically be diverted.
Theoretically. Got it. And then the third part of this hustle is the conference carve-out. This sounds like it involves travel.
It does. This one's about trying to profit from canceled work trips.
How would that work?
So the mechanism suggested is booking non-refundable flights. Maybe for a supposed client meeting somewhere like uh, Las Vegas is the example used.
Okay, non-refundable.
Right. Then the meeting gets canceled maybe because of, some external reason like a pandemic was mentioned as a possible excuse, and you pocket the flight credits. It's taking advantage of those inflexible booking rules.
Huh. Okay. And we even got a related listener submission example in the source material.
Oh, yeah?
Apparently, someone charged their company $3,000 a month for a productivity coach.
Yeah.
And the coach was just them texting themselves from a Google Voice number.
Wow. Okay. That's bold. It really shows how maybe in some places expenses can be creatively explained away.
To say the least. Okay, moving on. The next big framework shifts gears a bit. It's called the Delegate to Profit framework.
Yes. This one's all about leveraging other people's work, basically. Several tactics here. The first one is the invisible hand.
The invisible hand sounds intriguing.
It's about delegation and outsourcing arbitrage. So the idea is assign work to your interns,
Okay.
but then you secretly outsource their tasks to cheaper freelancers, say on Fiverr or a similar platform.
And you pocket the difference.
Exactly. You pocket the difference between what the company's effectively paying for the intern's time and what the freelancer actually costs. You're just playing the market rates for labor.
Right. Being a middleman, but for your own benefit. Okay, what's next? The mentorship monetization.
Yeah, another angle on internal money. Here, the concept is basically charging the company's internal development budgets for informal coaching that you might be doing anyway.
You mean like helping out a junior colleague?
Kind of. Example is billing the leadership development budget, maybe it's, say, $200 an hour, for career growth coaching. It taps into those often fuzzy definitions of professional development spending.
I see. Turning chats into billable hours internally. Okay, and the last one in this section, the meeting resale.
This one's almost efficient in a weird way.
How so?
The idea is converting your internal meetings, like your one-on-ones,
Yeah.
into external content you can sell.
Yeah.
So the mechanism proposed is turning these meeting notes or insights into, say, a Substack newsletter. They even suggest a title, Lessons from Management Trenches.
Okay.
And then you expense things like market research tools to help with your newsletter, billing it back to the company.
So you're repurposing company time, company information for a personal side gig.
That's the gist of it, yeah.
And they threw in a pro tip here too, didn't they?
Oh, yeah, a pretty cynical one.
Oh.
Always hire an underling dumber than you. They'll never suspect the grift.
Oof. Yeah, that says a lot about the mindset being described here. Okay, so if you're doing all this stuff, eventually someone might notice, right? So the source talks about emergency excuses for audits.
Right, you need a backup plan, apparently.
Mm.
This section is almost darkly funny, looking at how you might justify things if questions arise. First up, the Wellness Initiative dodge.
Wellness, how does that work?
The idea is to disguise questionable charges as wellness expenses.
Mm.
Label things as mental health apps, maybe using confidential billing names. It plays on the fact that companies generally want to support wellness stuff.
Right, hide it in plain sight under a positive banner.
Okay.
Okay, what else? The beta test gambit?
This one seems to rely on corporate amnesia, things getting forgotten.
Ah, okay.
So the suggestion is, if there's a weird charge from that ghost vendor you set up, blame it on some old forgotten pilot program, claim the paperwork got lost. And then you cover your tracks by saying, oh, we ended that pilot. We had to fire our fake rep. You create this past event that's hard to check.
Clever. And the third excuse, the legacy system glitch. That sounds familiar.
The classic, right? Blame the tech.
Yeah.
The tactic here is specifically blaming SAP, the big enterprise software.
Yeah, everyone uses it.
For things like duplicate payments that just happen to go to your consulting alias.
Yeah.
It uses the complexity and, let's be honest, the occasional real glitches of big systems as cover.
Fair enough. We also got another listener hack example here, too.
What was this one?
Expensing a MacBook as team collaboration hardware,
Okay. Seems plausible enough.
but then claiming it was lost in a fire while
Yeah.
simultaneously having an eBay listing ready to go.
Oh, wow. That's combining expense fraud with maybe insurance issues, too. Bold.
Extremely. Okay, finally, the source wraps up with something called a listener challenge, embezzlement bingo. This really drives home the provocative nature of the whole piece.
It really does. It's framed as a list of white-collar milestones put onto a bingo card. It's quite something.
What are some of the squares?
Well, there's a vendor who mysteriously shares your Venmo
Subtle.
using a remote work stipend to buy a PS5, but calling it an ergonomic controller.
Ergonomic, all right.
Getting promoted for cost-saving initiatives, which are actually just your side hustle paying off somehow.
Uh-huh.
Finance auto-approving, a $5,000 receipt for team building karaoke. That one seems specific.
Maybe. And this square, team morale improves after you stop doing work. That's pretty telling.
It is. And the bonus square they included. The CEO follows your consulting LLC on LinkedIn.
Oh, perfect. It paints this weird picture where this stuff is almost out in the open, or at least plausibly deniable at the highest level.
Yeah, it's a strange mix. When you look at all these hustles and excuses together,
Yeah.
What really stands out is the picture it paints of potential cracks in corporate systems. Budget processes that aren't watertight, maybe not enough oversight on expenses, or how delegation works.
Right. So just to recap, we've walked through the source's description of, well, alleged ways to generate personal profit inside a company. Everything from fake vendors and messing with training budgets.
That's outsourcing intern work and turning meetings into newsletters.
And then having a list of tech blaming or wellness-related excuses ready if you get audited. It's quite a collection of strategies.
It really is. And, digging into this kind of source material, even if it's satirical or exaggerated, it does make you think.
Think what?
Well, it prompts you to consider what are the underlying conditions, or maybe the perceived opportunities within some workplaces that might even lead someone to think up these kinds of schemes, let alone try them. It definitely gives you something to mull over about corporate culture and internal dynamics.